Welcome to Wealth Creation Investing. My name is Forex Joe. In today's training session, we're going to be talking about support and resistance within a specific trading style. In many of my classes, I share these gears, and these gears are, as you take a look at from going from left to right, are for a 15-minute chart, 30-minute chart, 1 hour, 4 hour, daily, weekly, and monthly. And you can really see and get a wonderful idea of how much a 15-minute chart, how much work it has to do to be able to build from left to right, rotating from a 15 into a 30, into a 1 hour, into a 4 hour, into a daily, weekly, and monthly. Now, everything that Forex Joe does is based on the previous 24-hour chart. We take a look at that 24-hour chart, and in the process, I go left to right. I'm looking at daily, weekly, and monthly charts to pick up pips. I am a swing position trader looking to hold trades for a longer period of time. Now, as a teacher coach of Forex, I have been able to develop a trading style that fits everyone. Doesn't matter whether you're using a 15-minute chart, some of you are scalping using a 5-minute chart, whether you're a day trader, swing, or position trader. We have specific rules of engagement, that allows you to have a light bulb moment. These light bulb moments will continue during your journey in the Forex markets. All I can ask each and every one of you is to find a specific coach or mentor that you trust who has entered into the Forex markets for a period of time, that has solid credibility, and follow them to the end to learn how to participate in Forex for the 21st century. Now, as we talk about support and resistance levels, they are subjects that seem to confuse traders. The reason why is that everyone is trying to use the same support and resistance information for various trading styles. As a scalper, because you're trying to generate less pips, you're going to use support and resistance in a different way than I would be trying to gather 150 to 200 pips. Many novice traders never pick up on this, and this causes many to fail. You see, support and resistance never tells us everything we need to trade successfully every time. They are merely guidelines. What I've done, since I'm a numbers guy coming from a sports betting background, is accumulated a series of numbers with my proprietary statistical analysis concepts, and this gives us a better chance to have success hiding behind grids that are strong. But support and resistance guidelines are important tools to use in your daily quest for more pip profits, no matter what trading style that you're using. You can review videos on price action and support resistance in different areas, and those of you that strip down charts and start learning about price action will be more successful. Well, why are support and resistance so important? Well, only one of two things can happen when a currency pair approaches a support or resistance level. The currency pair can reverse in direction. It's like a ball bouncing off the floor. A currency pair that hits its support can bounce up, and at a strong resistance area it can bounce off the ceiling. These bounces sometimes provide 100+ pips or more if you are looking in the right support and resistance charts. Now, as we remember our gears, we'd have to be looking at a daily, weekly, and monthly chart. We couldn't be looking at a 5 or 15-minute chart to get some of these 100 pip moves. Number two, the currency pair can break through the support or resistance level. Now think about that for a second. This is known as a breakout. A breakout above resistance is seen as a bullish signal. A breakout below support is a bearish signal. These breakouts sometimes provide 100+ pips or more. Big lights trader, that's what I am. I trademarked the big light strategy versus big light traders. Big light strategy is when you're looking at the daily, weekly, and monthly chart. I call them the three big dogs, and looking to accumulate pips. You're watching daily charts, weekly charts, monthly charts, and waiting patiently for huge pip moments and specific entries and predetermined exit strategies. Most of the times these movements are off bounces or breakouts of key support and resistance levels. I drill down the daily, weekly, and monthly charts once a day. I know in advance where I'm looking for specific entries under current market conditions. Now, before I ever push a button to complete a trade, I have my stop loss, entry point, and expected profit taking exit in place. Each trade has a different amount expectation for pips. There are many areas, we'll have to cover that in future training. Support and resistance are huge in trading longer term for management on entries and exits. If pairs are consolidating and retracing within these channels, you will use the smaller numbers for safe entries and exits. Many time frames, support and resistance levels, will help me predetermine where currency pairs will have difficulty penetrating or continuing or slowing down before moving in a sense of direction. In closing, each trade you execute is a distinct but separate entity. In fact, you could take it one step further. Each currency pair that you're trading is a separate but distinct entity. So if you understand that going in and you start beginning the process of learning price action and then beginning to understand how support and resistance will work depending on what trading style you're using, you will be on your way to success in Forex markets. For this session, my name is Forex Joe of Wealth Creation Investing. Here's hoping you have a wonderful, blessed day. Until next time, may all the pips be with you. Thanks for taking time to attend this video webinar, and I'll see you next time.